1 year ago, the American Institute of Certified Public Accountants released a new SSARS standard. And according to most observers, Statement on Standards for Accounting and Review Services number 21 is the biggest change to the SSARS standards since they were first issued more than 35 years ago. Specifically, the clarified guidance will help financial statement users differentiate between when an accountant performs a compilation engagement, prepares the financial statements, or merely assists management in preparing financial statements. As you might expect, this distinction is especially critical in a cloud computing environment where internal management often collaborates contemporaneously with their external advisors on financial record keeping. The good news is that practitioner awareness of the new standard has increased significantly since last year. The not so good news is that many practitioners are still not aware of the significant changes that SSARS 21 makes to compilation and review engagements, or the specific requirements necessary to provide financial statement preparation services. And as a reminder, SSARS 21 is composed of 4 different sections. Section 60 on the general principles for engagements performed in accordance with SSARS. Section 70 on the preparation of financial statements when the accountant is just engaged to prepare financial statements, but not a compilation of those financial statements. Section 80 on compilation engagements when the accountant is engaged to perform a compilation engagement, and Section 90 on the review of financial statements when the accountant is engaged to perform a review of financial statements.
Returning to our program is regular expert commentator Michael Glynn, Senior Technical Manager at the AICPA. And since SSARS 21 was released about a year ago, let me say happy anniversary to you, Mike.
Well, thank you very much, Mike. It's been an eventful year at folks looking as to how SSARS 21 fits in their practices and whether or not to early implement, but it has been an exciting 1-year anniversary, and going forward it'll be just as exciting.
Well, you told us last year, Mike, that the Accounting and Review Services Committee wanted to, quote, revise and clarify, end quote, the standards relating to compilation and review services. 1 year later, I suppose it's time to issue a report card on SSARS 21. So from your perspective, what grade do you deserve for the effort?
Well, Mike, I think, and other folks using their judgment and their viewpoint as well may differ on the scorecard, but I think that the committee hit a home run here. I would give the committee, the RSET is an A+, because the standards now, SSARS 21, once we cut away all of the bells and whistles and everything else around it, SSARS 21 really is a true clarification of the existing literature. Even this new preparation service that folks are all excited about and everything else, at the end of the day, it really is just the old management use only compilation with us having to worry about who the heck the client gave it to stripped away. So it really is a true clarification. And now the services we can provide, that is a non-reporting preparation, the compilation, and the review are all real clear. The standards are real streamlined, with a lot of the side stuff moved to a guide where you can go. So I'm thrilled with where it is. And the response to SSARS 21 has been overwhelmingly positive.
Since you mentioned the management report, let's start with that aspect of SSARS 21. It is really true that under Section 70, a management report does not require a written report even when the financial statements are expected to be used or provided to a third party?
Well, Mike, that is true. The idea is this. Think about it this way. There are certain services that we can provide for our client that where we're clearly jumping into their system of internal control over financial reporting. You know, where we come in, tax work is clearly in there, bookkeeping, those kind of things are clearly in there. Financial statement preparation is also clearly an internal control function of our client. So just like all those other non-attest internal control functions, we do not no longer require a report. Now, that's not so revolutionary because we always had a mechanism where you didn't have to report, and that was as long as a client didn't use it outside of the management circle. Well, why do we care who they give their financial statements to? As a matter of fact, we can't control it anyway. They ended up going to third parties and being in loan files and stuff like that anyway. And at the end of the day, the client paid us for a service, and that was to prepare their financial statements. So what the ARS said is, hey, look, let's do away with this prohibition on the distribution. They're their financial statements. Let them do what they want. And that is a non-reporting preparation service. To make it easy in folks' mind, I would just equate it with the old management use only compilation. With some of the words changed, saying for management use only on the bottom of the statements, we now say no assurance is provided. But it is that management use only set of financial statements with the limitation on distribution removed.
On one hand, you say that no report is required. But on the other hand, you say that a legend is required. So where do you put that legend, especially when there's no report?
Well, Mike, great question. And there is actually no requirement as to where you'd put it. The way we've envisioned it and the way any of the illustrations that I've drawn up for folks is to put it on the bottom of each page. Because again, that's something that we've always done as accountants. If we have prepared financial statements for management use only, we put for management use only, not intended for third-party use, on the bottom, traditionally, of each page of those financial statements. If, say for argument's sake, in the past, if we had been engaged to review or perform a compilation on those financial statements, we put a legend on there that said, see accountant's compilation report, right? So using that same construct we've always had, now the way we've envisioned it is you'd put a legend on there that says no assurance is provided on these financial statements. Now, having said that, we know that accountants, CPAs, for the most part, are fairly smart people. So I have been going around and speaking at conferences and getting emails and phone calls from folks, and I've heard a lot of different things that folks said they would do, and they're all fine. One that I hear a lot of is folks saying they're going to develop a watermark, similar to the way we've always watermarked draft and say, no assurance provided in the watermark, and they've asked me, is that fine? Absolutely. As a matter of fact, I think that's insanely clear. Perfect. If you want to do that, there's nothing at all wrong with that. Now, again, having said that, if we were all our viewers were all in the same firm talking about what we do, I would still say I'd put it at the bottom in a legend because, again, that's the convention we've always had and probably what I would do going forward. But if you want to be creative and come up with a different way, put it in the headings some other way, there's nothing wrong with that, as long as it's clear that no assurance is provided.
Okay, so now our viewers know where to put the legend, Mike, but you've got to tell our viewers, is there any specific requirement about what that legend should say?
And I'm sorry I didn't do that, but Mike, the requirement is just that the legend state that no assurance is provided on these financial statements. That is the required language. Now, a lot of folks have asked me, hey, but can I put some other stuff in there? Now, having said that, again, I've said a few times during the course of our discussion today that, if we were all partners in the same firm, my view is this, that no assurance provided is so darn clear, I wouldn't mess with it. I want the user to see that real clear that no assurance provided in these financial statements. But if in your professional judgment you want to do something else, like some folks have said to me, hey Mike, we like people to know that we prepared these financial statements. Can we put down Jones & Jones CPAs prepared these financial statements, period, no assurance provided? And the answer is sure if you want to. Or, Jones & Jones CPAs provide no assurance on these financial statements. There is nothing that prohibits you from doing that. I would caution, though, that one of the real benefits of just saying no assurance provided is that we're not name associated with those financial statements, and therefore how the heck can a user put more comfort in them because we were involved? Well, now we've kind of jumped over that fence a little bit if we put our name on there or print it out on our letterhead or any other number of things. So I'd be careful. Again, if we were all in the same firm, my risk management strategy would be to kind of shy away from that. But if you feel that that's what you want to do, get your name out there and everything else, there's nothing wrong with doing that. The only required language is no assurance provided. Anything else is at your discretion.
By starting with the management report, Mike, we did skip over the so-called general principles of Section 60. And I do recall that section does contain a requirement that for all engagements, the accountant is required to obtain a signed engagement letter. Are you saying that you've got to get that signed engagement letter, even if you're not providing a written report?
Yes, well, Mike, and I'll tell you, that is something that is vital, especially to this preparation service. What the ARSC has done here is they've said that for all engagements performed in accordance with SSARS, that's all your reviews, all your compilations, and all your preparation services, you have to obtain an engagement letter that is signed by both the firm and the client. Now, especially with respect to these preparation services, that's vital. The understanding with the client is just an absolutely vital aspect as to whether or not we're even in SARS. Because SARS do not apply when all the client wants to do is some accounting work, some bookkeeping services. Say, for argument's sake, they hire us to do payroll work and maybe book a journal entry or two. Well, that's not a SARS engagement. Where it jumps into the SARS engagement is as part of that engagement, the client needs us to prepare financial statements. That's when we jump into Section 70. We jump into 80 on compilation and 90 on review when they tell us, hey, look, I need you to perform a compilation and give me a compilation report, or I need a review and a review report. But we're only in 70 when the client says, as part of this engagement, I need you to prepare financial statements. So the best practice, what this kind of forces us to do is, with all of our clients that we do this kind of work for, is to sit down with them on an annual basis and just talk about what it is they need. And if they say, look, I understand that my system prepares the financial statements, I'll generate them when I need it. I just need you to do some of the underlying work. Book some journal entries, run my payroll, things like that. Calculate sales tax maybe remitted to the state, all that kind of good stuff. Then we're not in SARS. That's just an accounting, bookkeeping services engagement. But if they tell us that, oh, by the way, I need you to give me financial statements, I'm going to run to the bank and say that Jones & Jones CPAs prepared these financial statements. Then we're in Section 70 because as part of that engagement, we were hired to prepare financial statements. So that understanding with the client is vital. And the ARSC just made that clear that you have to obtain a signed engagement letter for all of your compilation, review, and preparation engagements. And Mike, if I may, just a little side note, folks might say, well, that's not required in an auditing standard. Well, I would argue that it kind of is. It's just implied. It's not as clear in the auditing literature. As a matter of fact, I was at an ASB meeting, and an ASB member said that an engagement letter that's not signed by the client and the firm is, direct quote, not worth the paper it's written on. So I would get a signed engagement for all of my engagements.
I heard you say, Mike, that Section 70 of SARS applies when you're preparing financial statements that are management use only. In other words, they're not expected to be used by a third party. So how do you know when Section 70 does not apply?
Yeah, well, Mike, also in addition, Section 70 of SARS 21 does not apply when the preparation of financial statements is a byproduct of something else. Like, say, for argument's sake, we have a case where we are preparing financial statements for our use in developing the tax return for the client that's going to go to the taxing authorities. And therefore, that they really didn't hire us to prepare the financial statements. They hired us to prepare the tax return. If that's the case, then Section 70 doesn't apply. That preparation was just a byproduct of some other service. Same thing like with litigation services, or even business valuation services. If they're hiring us just to prepare a business valuation report, or to help them through litigation, or to develop a written personal financial plan, if financial statements are developed in that regard, well, then Section 70 doesn't apply. Now, having said that, Mike, I would caution folks. There's a difference between what standards are and what our best practices and our risk management strategies as a firm are. I would say, hey, look, Section 70 just has all these great bells and whistles in it that alert potential users as to the limitations on the financial statements, and there's no assurance provided. It makes it clear that our association ends with no assurance. So if it leaks out that who the preparers were, hey, look, it's clear right in the face, no assurance is provided. So I again would say this is not the SARS 21 requirement. If we're all in one firm, our risk management strategy is a different issue altogether. And I would say, hey, look, if there's financial statements that I know that we prepared, or that someone's going to think we prepared, I'm going to bang that no assurance is provided right on each of them, and I'm going to follow the other safeguards that are in SARS 21.
We're covering management reports in a summary fashion this month, Mike, but are there any bells and whistles, to use your expression, that you'd like our viewers to keep in mind?
Well, Mike, that's a great point. Remember, now we're preparing financial statements and there's no reporting requirement. Whereas in the past, we used to report when we knew about known departures from the framework, or when management omitted substantial disclosures, or if the financial statements are prepared in accordance with a special purpose framework. And let's take them one at a time. Say, for instance, if the financial statements are prepared in accordance with a special purpose framework, the cash basis, the tax basis, etc., we still have to make sure that users are aware of the fact these are not GAAP financial statements. And how I would suggest that we do that is just kind of put it in the titles. You know, we have like ABC Company. Next line would say balance sheet, tax basis, you know, December 31st, 2015. That's how I would do it. You know, you could put it in a selected note. You can put it down with that legend if you want to, although, again, my recommendation is to leave that legend alone. But if you want to put it down there, that's fine as well. Another instance would be, you know, management has elected to omit substantial disclosures. Users have to be made aware of that. So what, again, I would suggest is I'd put that in the titles. You know, ABC Company, balance sheet, line 3, substantial disclosures omitted. Line 4, December 31st, 2015. A lot of people have told me they're going to put that in the legend. Substantial disclosures omitted, period, no assurance provided. Again, I don't like that personally, but if you think that's the way to go, you know, you can do that as well. And the third issue there was if we're aware of a departure from the framework, like say, for instance, these are GAAP financial statements, but they use a tax basis of accounting. Well, in that case, I would probably look to put it in a selected note, like just one note if substantial disclosure omitted, explaining the departure. Maybe you can explain it on the face, like beside PP&E on the balance sheet, whatever, as long as users are made aware of that. Now, having said all that, I'll add one last thing. Those clients where I'm aware of a departure from the framework, those are the ones that, using my knowledge of the standards, I don't mean me, Mike Glynn, I mean us as professionals, I'd probably look to steer those guys to a compilation. So I have a report that explains the departure in it. So, but that would just be my own risk management again, Mike, not what the standard requires.
Well, Mike, if you don't mind, I'd like to move up to Section 80 on compilation engagements. Now, last year, you told me that the new standard eliminates the need for the accountant to determine whether he or she has prepared financial statements by eliminating the so-called submission requirement. And you'll have to explain it to me once again. How can you perform a compilation engagement without submitting it?
Well, Mike, the submission requirement actually ran to when you jumped into the literature. Now, think about it this way. The audit literature, we are only in the audit literature when the client hires us to do an audit. Like, we're never out at a client's office and working away and go, holy smokes, I've done so much work here now, I have to audit these financial statements. That never happens. We only do the audit when the client hires us to do the audit. Same with the review. The compilation was set up differently, and that was because back in 1978, we didn't trip into preparing financial statements. We actually had to sit down at a desk with blank paper and turn that blank paper into financial statements. Like, we never go, holy cow, how'd those financial statements get there? So the ARS did, to be clear, in 1978, they were trying to be as clear as possible. They said this compilation standard is what applies when we prepare and present financial statements to our client or to third parties. And then they further defined prepare and present as submit. So the compilation literature is always submission driven. That's why folks tripped into it. What we've done now is say, to be clear, and this is dealing with modern technology and where we are as a profession in 2015 and 2016 and beyond, you know, in 2014 when SARS was issued, is say, hey, look, let's make the compilation literature apply only when the client needs us to do a compilation. Only when they come to us say, hey, look, the banker needs that report that says, hey, look, you didn't perform any procedures, but the statements kind of look right. Well, that's what a compilation report is. So we're only in the compilation literature now when the client hires us or engages us to perform a compilation. So the whole notion of whether or not we submitted financial statements goes away. I mean, we will obviously prepare and present our report. So but that was never the trigger whether or not we prepared and presented a report. It was whether we prepared and presented the financial statements. That notion and that thought process we had to go through is now gone. It's so clear, bright line. I've always been on the program saying, hey, unfortunately, we don't give bright lines. It's got a lot of judgment. Well, you asked for it, here it is. It doesn't get any brighter than that. Like, folks ask me, hey, when am I in the compilation literature? You're in only when the client hires you to perform a compilation. Well, when am I in the preparation literature? You're only in when the client hires you to prepare financial statements. If it's anything else, if you start going, yeah, but what if I book 100 journal entries? No. Did they hire you to prepare financial statements? If not, it's just a bookkeeping service. You're not in SARS. It is as bright a yellow line or Technicolor line, whatever you want to call it, as we can possibly come up with.
Mike, you told me last year that the ARSC was going to streamline the compilation report. And I'm all for streamlining. But what exactly does that mean in this context?
Well, Mike, great observation. Yes, the ARSC did streamline the report. And what that means is that, hey, look, you know, for the longest time we had this report that in plain English kind of said, hey, look, we read these financial statements. They look like they're in accordance with U.S. GAAP or cash-based accounting, whatever the case may be. But, you know, what do we know? We didn't test any of the numbers. They could all be wrong. No assurance is provided. In plain English, that's what the report said, which is clearly a lot different than what a review or an audit report says. The problem was this, is that the report got to be such a level that it looked very much like an audit or a review report. And users, say, we'll give an example of a banker. A banker might see an audit report at 9 o'clock in the morning and kind of give it a glance and say, okay, I have this report from the CPA firm and I can now put this level of reliance in the financial statements. Then 3 or 4 hours later, they're looking at a compilation report. The two darn reports look exactly the same, and they may not read that compilation report and place the same level of assurance that they did on the audit report on that compilation report. So what the ARSC did is say, hey, look, let's make this non-assurance report look as different as we can make it from the review and the audit reports. So we took out any idea of putting in headings like manager's responsibility, accountant's responsibility, all that kind of stuff. So it's basically one paragraph, real streamlined, that says in plain English, you know, these financial statements look like they're in the right format, but we didn't test any of the numbers, no assurance provided. Now, we also did away with the requirement to even put a heading on there that says, you know, accountant's compilation report. A lot of folks have asked me, because folks apparently like the idea of heading it accountant's compilation report, asked me if there's a prohibition, and the answer is no. If you want to put that heading on there, you can. Remember, the standard just tells you what you have to do. If it doesn't strictly prohibit something, hey, use your judgment. You do what's right for you and your clients. If you want to put that on there, you're welcome to do it. But at the end of the day, the report will look, or the SSARS 21 report does look, a lot different than an insurance services report, and that was the intent.
On the one hand, the compilation report is streamlined, and I like that. But there are still situations when additional paragraphs have to be added to the report, aren't there?
Yes, Mike. There's still a requirement to add additional paragraphs, like, say, for argument's sake, you're aware of a known departure from the framework. Again, we didn't do any work. There may be departures all up and through it. But if we know going in that the client is looking to prepare, say, for argument's sake, GAAP-basis financial statements, but they want to use their tax-based depreciation, we would disclose that in a separate paragraph of the report. We also are still required to include that sentences, we are not independent with respect to XYZ company if our independence is impaired. We also are required to make clear if the financial statements are prepared in accordance with a special purpose framework, you know, and what a lot of times we used to refer to as ACBOA frameworks, cash basis, tax basis, regulatory basis. We're required to make that clear as well. Or, and the last example I'll give is like if management elects to omit substantial disclosures, we still put that in there. So there is the idea of the report kind of getting a little bit bigger, but at the same time it will look very different from the review and audit report because it won't have the headings over the paragraphs and things like that.
Well, you were certainly correct, Mike. SSARS 21 really does revise the guidance for compilation engagements. But let's turn to Section 90 on the review of financial statements. When it comes to reviews, the new guidance is literally a clarification, isn't it?
Mike, and that's another great observation. Review, for the most part, SSARS 21 left review untouched. A couple of little tweaks here and there. You know, the report, we now included the requirement to put the headings in there, management responsibility, accounts responsibility, so it looks kind of similar to the other assurance report, which is the audit report. And there's some additional clarification around communications between, you know, the accountant and management, et cetera. But for the most part, SSARS 21 leaves SSARS 19 untouched and just clarifies the literature. SSARS 19 is where we went in and really hammered what a review is. If folks may remember a few years back when you gave me the privilege of appearing here on the program and talking about SSARS 19, where we made clear what a review was and what you had to do in a review. SSARS 19 was really part A. SSARS 21 kind of came in at the end and said, all right, let's put in the clarity format where we separate the requirements and the application guidance and also kind of clean up a few things. That's really all it was.
Since you're discussing the clarity of the review standard, Mike, let me ask you about convergence for those viewers whose financial statements go beyond the U.S. borders. Now, you've told me in the past that the AICPA tries to use the international standard on auditing as a base when it drafts clarified standards. So does that mean that Section 90 is now based on the International Standard on Review Engagements, known also as the ISRE?
Well, Mike, and that's a great observation by those folks who pointed that out to you. The international folks have drafted and issued their standards using the same format, where the requirements are in one section and then the application guidance, all the examples and how you'd apply those requirements are in a different. They use a different word than we do. They use the word shall. We use the word should, you know? And so all those shalls or should are in one spot, and then everything that feeds off them isn't, you know, back in a different section altogether. Now, having said that, when you say about using the same language, whereas the Auditing Standards Board was passionately concerned with that kind of harmonization and convergence with the international literatures on auditing, so that an audit is an audit is an audit is an audit. And there are some differences, and we've talked about that too, but the compilation review literature is not strictly harmonized with the corresponding international literature. For example, what the ARS decided to do with the review was really to harmonize with the review standards that we have for auditors. There's review standards in the audit literature for reviews of interims. The ARS said, hey, look, if you're doing a review of interims in accordance with the auditing standards and a review of other stuff when you're not the auditor, well, for the most part, a review should be a review, should be a review, should be a review. Now, we're going to look to, and the ARS did, kind of harmonize with that literature. Now, having said that, that literature is harmonized with the international literature on for interim reviews, not on the international literature for non-interim reviews, if you will, when you're not the auditor. So we kind of backdoored a little bit international harmonization there. The international folks, with respect to the compilation, they're not as far along as we are with respect to having this service, and their compilation service is kind of like our preparation service with a reporting requirement. And we kind of see now in this country that really didn't work as well as, and it did work for many years, but given the current environment, really doesn't. So we kind of went our own road with respect to the compilation and preparation stuff. There's not much. We look to minimize differences where we could and use some of the same language, but they're significantly different.
I've got a few other questions for you this month, but going into them, I want to ask you the question that I usually ask you at the end of our interview. If our viewers could take one thought away from this program about SARS-21, what would you like that to be?
Well, Mike, the one thought I'd say is this, is what SARS-21 does, and I think it's great, is it focuses the standards on us providing the service that the client hired us to do. There's no more the client hired us to do some accounting work and, oh my goodness, here's financial statements. I have to force you, client, to accept this compilation report because that's what my professional literature says. It now says, hey, look, if all they hired us to do was a bunch of bookkeeping work, well, that's bookkeeping. If all they hired us to do was prepare financial statements, well, that's this new preparation service. They don't need a report. If they need a report, then they hire us to do a compilation. And, of course, then the review is separate. So the one takeaway I'd have is now we have the standards in hand that will allow us to just give the client what they hired us to do. And having said that, Mike, if you don't mind my adding, just for some folks, there are a bunch of additional resources that, like I personally have developed and put on the AICPA's website to help folks through the process of implementing SARS-21, such as a matrix that shows the differences between the engagement letter from the SARS-19 letter to the SARS-21 letter, and some additional resources around, hey, look, this is what the illustrative compilation report looks like. Here's some illustrations of the engagement letter and things like that. So folks have a chance to check that out. It's just right on the AICPA website. Just type in SARS-21 implementation in the search engine and you'll find it. And if not, let me know and I'm happy to help.
Now, before I get to my final questions for you this month, Mike, I do have one follow-up question for you about SARS-21. The agenda for your AICPA committee, the Accounting Review Services Committee, says that the ARSC is going to consider what should be done with those sections that were not included in SARS-21. So tell me, How is it possible that some of the ARS guidance was not superseded by SARS-21?
Well, Mike, that is a great observation on your part. The SARS codification prior to SARS-21 included a bunch of different sections, like Section 200 and Section 400 on, 400 was on communications with between predecessor and successor accountants, and 200 on comparatives. What the ARS looked to do was really to streamline the standards as part of SARS-21. Again, with the overall concept being to clarify, to make it as easy to understand the literature as possible. Now, a lot of that stuff that was in those old AR sections that were not clarified, yet they were still superseded by SARS-21, a lot of that, for lack of a better term, stuff went to our authoritative guide. Now, the SARS has an advantage over the auditing literature in that there is a dedicated authoritative guide just to these types of engagements, whereas the audit guides are to industry-specific stuff, But a lot of that stuff went to the guide. Now, what the ARS is looking to do is make sure nothing fell through the cracks, looking at all the old interpretations, looking at all those old AR sections and saying, hey, look, is there anything that's going to, again, for lack of a better term, real plain English, that's going to go away that maybe we want to retain, whether that is in a SARS standard, unlikely, an interpretation, maybe, or whether the next update of the guide should include a couple of more things. So that's what the ARS is looking to do, just to make sure nothing fell through the cracks.
Okay, you mentioned also that many of our viewers are smaller firm practitioners who are serving and are dedicated to supporting Main Street businesses. Now, over the past few years, you've told us about the Institute's financial reporting framework for small and medium-sized entities. Is it really possible that our viewers can leverage this FRF for SMEs framework to help support Main Street businesses?
Well, Mike, that is a great question, and it's another thing that I am proud that the AICPA developed. Now, as we know, many of the banks and other third-party users of these financial statements that smaller firm, local, as you say, Main Street, USA businesses, the users of their financial statements, a lot of these folks, really the cash base of accounting, even the tax base of accounting really doesn't get them home, doesn't get them to what they need. They need an established set of standards that they can look at and say, hey, look, this is a gold star set of standards. And for the most part, that's always been U.S. GAAP. Now, the problem is U.S. GAAP is very complex, and a lot of these smaller firm folks and their clients really don't need those complex financial statements for these less complex businesses. So the AICPA developed this, what I think is a fantastic framework for small and medium-sized entities. It's not intended for the larger entities or even not-for-profits, etc., but for these smaller entities to follow this established framework, which makes it different from cash and tax basis, elevates it above all other special purpose frameworks, to be able to prepare financial statements in accordance with this framework, and then it would fit the needs, the specific needs for their users, banks, etc. And banks are accepting these financial statements. Now, what the AICPA has done is to make it easier for folks. You really need to have the discussion with your client. The AICPA has developed illustrative financial statements and other resources to help you explain and show your clients what these financial statements are and how they may better serve their needs. It's not meant to be a shortcut. This is a globally recognized set of accounting, principles that folks can follow. And, check it out, because I really do think that a lot of our clients would find a great benefit from this. And it'd be a shame if they just miss that benefit because maybe we didn't check it out ourselves or whatever the case may be. They may decide they need to stay with U.S. GAAP, and that is fine. But if they see a benefit in this, there it is.
The AICPA's Michael Glynn, great seeing you once again.
Well, Mike, it's always a pleasure seeing you.